Hello traders, it is Sunday, November 3rd, and it's time for our weekly video. As always, we're going to review our picks from recent videos and live events. Then we're going to do our market analysis, and then we're going to find some new picks. We are only a couple of days away from the election. We've had a lot of news during the last week that's been driving the action. And so we're going to also take a look at the market and how that election might possibly play out. A week ago, CLS was a stock that I highlighted, and you can see this big earnings gap up and this breakout through horizontal resistance. I love that. I really like that price action. You can see that this is not the type of stock that just makes a move and it continues in that direction relentlessly. It has some back and forth, but this is a really nice breakout. And you can see during the last week, the market has actually pulled back a bit. What has the stock done? It's been able to hold AVWAP-E. It's been able to hold all of the gap up recently. And it looks poised to me to continue higher. I really still like this pick. But you don't have to be aggressive with it. It's the type of stock that you would want to buy on dips, and you'd want to make sure that you have market strength. If you have those two components, it's going to be a really decent swing trade that you can hang on to for maybe a week or two. On Wednesday, we did a live event, and my pick during the live event was Reddit, RDDT. And we'll take a look at what that stock did. So you can see the live event was during this massive long green bar here. This is a stock that I feel you can start taking small positions in for a longer term investment. I love the breakout. Let's zoom out. We'll recap this. So this is an IPO, so it doesn't have a lot of history behind it, and that's where it IPO'd. Big cup and handle breakout, big breakout through horizontal resistance, and there you can see that breakout. I've seen a lot of tech companies, they go through the IPO, they trade for about a year, get a lot of back and forth trying to feel out the company, see if its valuations are appropriate, get some earnings under their belt so you can see what it does quarter to quarter, and then all of a sudden they break out, and they break out big. This is a sign that institutions are interested. I believe you're going to see longer term buying pressure on this stock. So if you do take a starter long position for a longer term trade that might span 3 months, 6 months even, maybe longer, then your approach is you'd buy a little bit of it here. Well, why would I buy a little bit of it? Maybe it's going to pull back a lot. It might not pull back much at all. And you can see this long green candle right here has largely been preserved. We'd like to see half of it preserved. Is that the end of the thesis if the halfway point is breached? No. Is it the end of the thesis if the open of this candle is breached? No. We don't want a lot of this gap filled, but I would be okay if even half of that gap filled. I don't believe that is going to happen. And that's why you start taking some starter long positions now. If you get a decent pullback, especially if the pullback in the stock is market related. So the market is pulling everything down along with it, and the stock has a little bit of profit taking after a big gap up like that, that's going to be an opportunity for you to start adding to that position. As soon as the market finds support, you want to see the stock jump off of that support. If you never get that pullback and the market finds support this week and it starts to grind higher and it takes out the all-time high, this is a kind of stock that you would add to as it's making a new all-time high. And then from that point forward, you're basically evaluating the price action. You want to make sure it's preserving its relative strength. Dips are brief and shallow. They are not deep. You don't see series of red candles. The duration is very short. So maybe you get a red candle or two and then boom, the stock is right back at it. Those brief and shallow dips are areas where you can add because you've seen a little attempt to take profits and then the stock continues to move higher. And if I had to, I know I've been doing a article, been writing it, NVIDIA, everybody knows about NVIDIA. So if we go back and we take a look at some of the price action that we've seen historically on NVIDIA, we can see areas that we would want to focus on. And I want to go back and zoom all the way out. This is the type of price action that you want to see, where you get a little bit of a compression. That's as good as a dip. You can add there once you get that new high right in there. This is the type of consistent price action that I'm expecting to see in Reddit, okay? Very, very tight, orderly price action. Dips, if you even get any, are very minor, and then the stock might compress and then another leg higher. So it just keeps floating higher. Nothing ever organized on the sell side. The dips are never that deep. And this is the type of move that you're expecting to take advantage of longer term. I think that's going to play out for this stock. So that's one to keep on your radar. If you are a short-term trader, what you're probably going to do is you'll be in and out and in and out and in and out. You'll be able to make nice gains doing that, but you're probably going to miss some of the nice bigger chunks of the move. And that's why you want to have a longer term swing type of mentality for that. DELL, I'm going to highlight that one because that was Harry's pick during the live event on Wednesday. I like it. Let's take a look at it real quick. We had this breakout here through horizontal resistance. Nice big gap up. Now this was in part related to SMCI and the woes that that company is having, and the conjecture that Dell is going to benefit from their troubles. But you can see how the stock pulled back during a big market decline on Thursday. That was a substantial decline. Friday, the market opened higher, but we've got this bearish engulfing candle, or excuse me, a bearish hammer off of AVWAP-Q, and the market finished on its low. What did the stock do? It rallied hard, and it finished on its high of the day, even with this type of market weakness. I like it. I think Dell's going to do really well. So kudos to Harry for finding that one. I think this stock is going to continue to move higher, and it's above the 100-day moving average. It's above horizontal resistance. It has plenty of room to move higher, and here you can see the relative strength and the decent volume M5 chart. This is what the stock did on Friday. So you can see really nice big move up, and then it held VWAP the rest of the day. Let's shift gears. Let's talk about the market. By the way, as we get going here, if you like my content, please give me a thumbs up. That helps elevate my channel so that I can teach other traders. That's ultimately what I'm trying to do here, is I'm trying to teach all of you how to trade this systematic approach. So the market in here a week ago, please always watch my previous videos. Keep me honest. Make sure that what I'm telling you is actually true, that what I said previously, I actually said. But a week ago, my mentality in here was, you know, I think the backdrop is pretty much set for the market to be able to move higher this week. I need to see the market move higher because I have starter swing positions on. So we broke through this horizontal resistance. We had a cup and handle formation. After we broke out on the FOMC statement, we tested that breakout right in here. Cool. This should be kind of all systems go right now. We should see a decent market move higher. We also have seasonal strength. So this week, I felt that we had lots of economic releases. So we had GDP. First look at Q3 GDP, 2.8% growth. That's a decent number. They were looking for 3% growth. Very good, solid number. ADP came out, I believe 244,000 new jobs in the private sector during the month of October. Really good number. Initial jobless claims came out. I believe that was at about 218,000. good number. I mean, should be a good jobs report on Friday. But everyone was looking for a pretty soft jobs report. I believe analyst expectations were in the 100,000 range. And the reason for it was because there were lots of strikes, Boeing to name one, and you had the hurricane aftermath, and that was going to impact the employment numbers. So Friday, we get this number, 12,000. That's it. Not 112,000, not 212,000, 12,000 new jobs. Whoa. That was a very weak number. Heading into that number, this was the price action on Thursday. We had a gap down and a bearish trend day that broke below a VWAP-Q. Okay. We also had mega cap tech earnings. So I felt that between the economic releases, we were going to get good numbers, and that would be market friendly. I felt that everything was built in so that the jobs report on Friday was better than expected, that it would come out higher. It didn't. I mean, everything pointing up to that number was telling me that the jobs report should be pretty decent. Amazon, Apple, Microsoft, Google, Meta, all released earnings this week. And they were pretty mixed. If you add Tesla in there, you had 3 of those stocks were up and 3 of those stocks were down. Didn't have a huge net impact on the overall market. And typically after you get those mega cap tech earnings, you're going to have a little bit more selling pressure. Shorts are going to be emboldened. They don't like to short ahead of those big releases because those stocks have fueled the market rally over the last couple of years. Once they announce, shorts get a little bit more emboldened, and you start to see a little bit of selling pressure. The numbers were good. Earnings reactions in general had been decent. So to this point, a week ago, what did I see here, right in here, that told me that the market should be flat to higher? What would be my strategy with those starter swing longs? Well, as I explained, I wanted to see the market take out the high by Friday. And I felt that all of that news should fuel a breakout because we've had plenty of time to compress. If you look at all the time that we spent during this drop and recovery, really since the month of July, the market has been in a gigantic compression because right here, it's right where it was 3 months earlier. But you've had an entire quarter of additional profits. So that means that valuations are actually a little cheaper than they were right here because you've got an entire extra quarter of profits. Didn't matter though because we didn't see that huge move higher. Now, it could still come after the election. And I look back at the last 6 elections and we've had 4 rallies the day after the election. And I believe those are relief rallies. Okay, it's not Democrat or Republican. It's actually been pretty split as far as which party wins. So the market has a relief rally. Now, in the year 2000, we had hanging chads, indecision for weeks. That's the one exception where after the actual election, the market did start to drift lower, especially when it dragged on. And then we also had the 2008 post-election drop. Okay, so that out of all 6, that was the one time that the market actually dropped. That's when President Obama was elected, and we were in the heart of a financial crisis. So it had everything to do with the financial crisis really heating up, and the market had yet to see deep, deep lows. Those weren't hit until March of 2009. So that's why the market sold off. In general, the market doesn't really react that much initially. It's going to take a long time for those policies to be enacted, and you've got a lame duck session for really 2 months. So will the election this year be different? Will it cause a gigantic move one way or the other? I don't know. What I do know is that when I expect something to happen, and it doesn't happen, then I need to start paring back my risk. And I need to sit back and evaluate, especially when we have a big event coming up. So it's not just the election that's coming up, it's the FOMC statement on Thursday. And so here I'm looking to be at or above the all-time high on Friday's close. And when it became apparent that that was not going to happen, I started getting into defensive mode. And I'm like, okay, well, Thursday we got this big drop. On Friday, I need to see a nice rebound and I need to see a close above a VWAP-Q. That's what I had mentioned in the chat room and didn't get it. We made an attempt early in the day to get through a VWAP-Q. That would have at least put us back up to the open of this long red candle here. I would have felt pretty good about holding my longs over the weekend. But I'm not that crazy about really having risk exposure in one direction or the other. The market doesn't have much of a tailwind here. Let's wait for the news and see how everything plays out. That's exactly what asset managers are doing. Do they feel that they're not going to have a chance to get long between now and year end at an all-time market high? No, they feel like they're going to have plenty of opportunities because the market has not been in a strong trend during the last 3 months. Plenty of dips, plenty of opportunities. And for those on Friday who felt that that weak jobs report was going to prompt the Fed to ease on Thursday, they don't have to take a position now. They can wait for Thursday. They don't have to wait very long at all. So let's just wait until Thursday. And if that weak jobs report gets the Fed even more dovish and they look at having future rate cuts, then I can take a position. But for right now, I'll wait for all of this news to play out. And that's why we saw a little bit of soft price action this week. We didn't get the breakout that I was looking for. And as you take a look at the stocks that I've been suggesting over the last few weeks, I mean, they've all held up really well. So they're not tanking and there's nothing nasty happening to them. It's just a starter swing position. If you've got to take a little bit of a loss on it, fine. It should be negligible. If your risk exposure is minor, keep it that way. See how everything plays out. We do have a year-end seasonal bias to the upside coming. So we'll see how the election plays out. And I would need to see us break out above that 580 level convincingly and then charge towards that 586 level and blow through it very easily next week after the election in order for me to start getting back into those starter swing long positions. So that's kind of my perspective on it. What happens if the market tanks? I'm having a hard time envisioning that scenario, but let's say that it happens. You know, maybe it's the election so close that there is not a true winner. Perhaps some of the Senate and House races put each of those into a flux where we don't know who has the majority. Okay, that's uncertainty. The market doesn't like uncertainty. Maybe in that situation, the market pulls back. Maybe on Thursday, the Fed says, yes, we had a little economic soft patch, but we feel that's very temporary. It's related to the storms and the strikes, but otherwise the employment scene looks good. So we're not going to be easing anytime soon, folks. Well, okay, that could be construed as slightly bearish. So I am going to show you a short a little bit later, but we're going to still focus on the long side. The biggest point that I can make is this is a really good time to have your candidates ready on both sides, but don't take any action. Set upside alerts for your bullish stocks, set downside alerts for your bearish stocks. And so let's take a look at some searches that I ran. I looked through all of our searches and I actually conducted a search that yielded some nice results. So I'd rather spend a little bit of time on the search and why I constructed it the way I did, then you'll be able to take a look at the actual search results. So I wanted to make sure that the stock had strength on a D1 basis. So it has a buy signal for our trade signals. Okay, M5 is on a buy signal. Why would that variable be of interest to me? What did the market do on Friday? It sold off hard after it made its high and it closed near its low of the day. That type of selling pressure is going to put most stocks into a sell, okay? But this stock is so strong that it retained its M5 buy signal. Okay, that's good. I like that. So, option liquidity. I like to trade stocks that have liquid options. Most of you do too. Prior earnings were a day ago to 15 days ago. So, we're in the heat of earnings season. Could have released earnings anytime over the last 3 weeks. 5 trading days per week. That's why we use 15. So this is always according to the number of trading days. The other nice thing is that I don't have to worry that I'm going to have to adjust positions because earnings are yet to come this week or the week after. That event has already passed us by, so I can really focus on that reaction. And I can focus on relative strength that's been taking place the last couple of days during this market decline. That's why I selected that variable. High trend line breakout. Hey, the stock is above a trend line that it's recently breached. Okay, these are our automated trend lines. Those are all really nice characteristics for the stock to have. So let's go into the D1 chart and see what we've got here. Mind you, I've only got 5 stocks to look at. These should be some pretty good stocks, okay? Just by nature, we know that the market sold off hard Thursday. We know that the market sold off on Friday and closed on its low. So anything that's been able to stay relatively strong is going to be attractive to us. So let's take a look at what we've got. 5 little stocks. Zoom in a little bit, and there you can see your trend line breakouts. This is a compression. Earnings after the close. Boom. Nice big run up. On Thursday, when the market did what? It sold off. That's what you got on Thursday during a giant market decline. There is your follow-through buying on Friday when the market did that. That is strength. That tells me institutions are interested. Really nice looking stock. So I like it, but it's not going to be my pick of the day. Why? Because it's a pretty cheap stock. It's like a $9 stock, okay? It doesn't move very far. And a lot of the times it does this. Nothing. Okay, it doesn't move. The fact that it's got some buyers now is great, but here's what happened previously. Boom. You get your nice big move, you get all nice and excited, just like you would here, and then zzz, flat line. You can see, once it trends, it's not a bad stock pick, okay, but this is just not going to produce a lot of excitement for you. I'd rather look elsewhere. CVX, energy stock, breakout attempt at that 200-day moving average above the 100-day moving average. This is all good stuff. You can see earnings before the open, but it couldn't get through the 200-day moving average. Perhaps it can do that this week. If it can close above that 200-day moving average, yeah, then it could be a decent little pick. But not until then. So right-click, create alert, select SMAs, 200-day moving average. It's got to be above it. Let me know. When that happens, save it. Okay? I can also come in and very quickly click GTC, double click on the top of that bar. Now, if it gets above that 156 level, I'm going to know about it. GLW. I like GLW. GLW is another one of those stocks that does not move very fast. Okay, it's been in a nice, look at how nice and steady that uptrend has been. I like that. Okay, it's getting through all previous resistance levels right there. That's also very nice. I really like GLW. This could be my pick of the day, and I'll tell you why. Remember, I tell you to buy dips, buy dips, buy dips. So there you've got your compression. There you've got your breakout on earnings. They loved it, but the stock gave back a little bit. Here you've got Wednesday and Thursday. The stock pulls back pretty hard. I wish this were a green candle here and then a long red candle with the market, but it tests this breakout, okay? Stocks do that all the time. And then what did it do on Friday? Buyers were back. Even though the market sold off hard and it closed on its low, bearish hammer, what did the stock do? It rallied the entire day and it held its gains even with this backdrop. I might give you GLW just because I'm going to like it for Monday. All right, you get your pop, you got your dip, you got your support, you got your confirmation. The stock looks good. Everything to me looks good here. And there's your price action on Friday. You can see the stock opens higher, closes on its high. You don't have to chase this stock though, because you got this funky stuff going on, okay? Now that does tell you, with the lack of volume right here, that this stock is not going anywhere fast. If it were going somewhere fast, that price action would be much steadier. You would not see these pullbacks. It'd be more like what we saw in BHC. That's the pattern you want, okay? Nice, steady uptrend, little bit of a pullback here, checks VWAP, see you later. That I like. So GLW, choppy, chunky. I like it, but probably not going to be my pick. RBLX did a whole lot of nothing on Friday, and there you got your gap up after earnings, chunking around in here. Take a look at the daily chart, and that's a nice breakout. Multiple breakouts through these high plus trend lines. That's a significant breakout right there, but now it's still testing that high from right here. And you can see that that high was right around 53.88, and the close was 52.65. So it's still got to get through that one horizontal resistance level. And the stock has been really chunky and choppy. So I'm not super excited about this one either. I do like the price action, okay? It held all of its gains. That's a big deal, especially with the market pulling back. So I like it, but it might not be my pick of the day, TWLO. So here we've got a stock that reported earnings after the close on Wednesday, gapped up, doji, held all of its gains during a market bloodbath, and then Friday, see you later, off to the races. Zoom out, get a look at that 5-minute chart. Nice, steady all day long. Holds, 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 holds. Just tries to break out and pulls back a little bit. What did the market do? Selling off. Easier way to see that? SPY overlay. There you can see market moving lower, stock moving higher on big volume. Very, very tight price action. I like this stock. TWLO is going to be your pick. Really like that. I like what I saw in Dell. I think Harry's got a good pick there. I like CLS. It's going to be a little bit of a choppier stock, but I think that's going to be a nice longer term swing trade also. RDDT, I absolutely like for a much longer swing trade. But there's no reason, none, to take a position ahead of the election and ahead of the FOMC statement. We don't need that risk right now. I thought we had a window of opportunity to add to our long positions, or at least hold on to our starter swing long positions, if we made a new all-time high this week. We had the setup for it. We had the compression. We had the news events that were coming out. All of that should have been able to fuel that move higher, and we would have had a nice little cushion in our longs heading into those events. We don't have the cushion. Take the position off, go to the sidelines, see how this plays out. So I would not advocate having any swing positions on right now. If you've been tracking or buying the stocks that I've shown you in the last few weeks, you've been buying them down in here. You probably have some decent profits in it. The stocks have been performing well. Go to the sidelines. Let's see what happens. And then let's go from there. So I told you that I would look at some bearish trades, and I do have some in mind. I'm going to show you one in particular because China has been easing credit like mad, and FXI is one of the indexes in China, and you can see this big rally. As this rally was unfolding, let's see, September 24th. If you ever want to check back and see what I was saying in other videos, you can go back to those videos on September 24th. My statement was, this is going to set up a really good short. Okay, said it here, said it here. It's in these videos because China is in deep trouble right now. They are in a deflationary period that's never good. They have consumers who are really watching all of their money, all of their expenses. Their economy has been slowing down. This is a last-ditch effort almost for China to stimulate its economy. So it's been easing considerably, and that's what sparked this move, was the notion that, oh, everybody's going to go out, it's happy times, it's good times, everyone's going to be spending money. A lot of this was short covering. Okay, so if we go back and we take a look at a longer term chart, let me just go W1 on FXI. Look at that steady downtrend. When you get pops up like this and the longer term trend is down, you better find out what's going on in here. And it turns out that, oh, it's just money printing by the PBOC. That's not going to spark a lot of consumption, and these stocks are going to continue to pull back. And there is also another kicker to all of this. I think that if Trump gets elected, polls are pretty split. There might be a slight edge for him winning the election. If he gets elected, I think Chinese stocks are going to sell off because he's talking about imposing 20% tariffs on all Chinese products. So I would be looking at possibly even having a short position on FXI if I felt that way. If I feel that Trump's going to win and the polls are bearing that out and everything looks good, I might just take a position in it anyway because I don't see any great developments in China off of this money printing that they're currently doing right now. So I don't think there's a chance that we're going to see a big spike in FXI anyway. I think that there's going to be continued selling pressure, continued profit taking in this. And the kicker is that, yes, if he wins the election, you'll probably see a sell-off down to the 50-day moving average, which is at about $30 or so. And you can look at any of the Chinese stocks. They're all going to be kind of following what FXI does. BABA would be one possibility. So you can take a look at what's going on there, and you can see the pop up and the retracement back to AVWAP-E. In this case, you'd want to see a drop below the 50-day moving average. And another one would be, let's take a look at Baidu. So I think any of these are going to actually work. And so there's your decline, there's your tiny little bounce, and your breakdown below the 100-day moving average and the 50-day moving average never got close to the 200-day moving average. Not even close. Bounces are brief and shallow. Yes, that is the kind of short that I would be looking to take. So if you need a hedge for some of your longs into the election, I think Chinese stocks are going to be a decent little short for you, a good hedge for some of your long positions if you're wanting to hold those over the election. And the election, the next day, the post-election moves in the last 24 years haven't been that big, but who's to say? Maybe this time is different. So that's all I've got for you this week. Again, please subscribe to my YouTube channel and make sure to give the video a thumbs up if you like the content. TWLO is a long that I think you should be taking a look at. Some of the others that I highlighted today also look pretty good, but I think TWLO is going to have better price movement for you. I would stick to day trading. Let's get through the FOMC on Thursday. It's not Wednesday, but it's a very important point. FOMC statement is usually on Wednesdays, but because of the election, they moved it to Thursday. So let's wait for that reaction to the FOMC. Maybe there's an opportunity for us to trade, swing trade on Friday based on some breakouts or breakdowns, and perhaps then we'll finally have a catalyst in one direction or the other. Thanks so much for watching, everyone. Have a great weekend.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.